original audio and language, and then you can enable French. So you can click for the live translation of this webinar. And if you're already here, I think we want to give people 5 more minutes to join. So I just wanted to prepare you for whatever is coming next. And as you wait, you can actually tweet. You can take out your phones and go to Twitter. We are live tweeting this event under Cashless Africa webinar. Hashtag Cashless Africa webinar. That is hashtag Cashless Africa webinar as one word. And there will be a poll later on during the webinar. You're really encouraged to participate. The results will be shared in real time, so make sure you make yourself heard. And if you have any questions, post them in the Q&A section. Also at the bottom of the screen, just next to participants on your left. It will be on the bottom left here. The speakers will be more than happy to answer your questions. So in the meantime, let's give more people time to arrive. I can see the numbers are going up very fast, so we will start in probably about 2 more minutes. All right, in 2 minutes, we're going to get started. The participants are increasing, which is great. I'd love to have as many of you as possible. And you can tell us where you come from. Are you from Kenya? Are you from West Africa? Are you from South Africa? Just give us a shout out. We want to know who you are and where you come from. Hi, Jerry Kasimoango. I can see you're signing in from Kenya. Nice to have you. So you can also type in what you expect to get out of this webinar. Maybe you came here with preconceived ideas. You're not really sure about cashless societies. You want to find out more, but you're not really sure what it is, or you know what it is, and you're thinking, I could teach a lesson or two to these panelists. I'd love to hear from you. Oh, good. I can see this is an international webinar. Zakaria from France, Rua from Kenya, Shingie from Johannesburg, Ghana. This is awesome. Well, keep telling us where you're from and who you are and what you expect, what you think this is about. What did you read before you came here? And are you going to get surprised by what you find out? The panelists are really good, and you're really waiting to get some insights from them. They're going to be amazing and awesome, so just wait. Hey, GVG, you have a lot of followers, a lot of fans. There's so many people here from all over the world. It's amazing to see. So now, people, my name is Carol Odero. Let me introduce myself again, the editor-in-chief of CIO East Africa magazine. This webinar has a live translation service into French. So if you want to listen to it in French, at the bottom of your screen, there is something that looks like a round globe. You can click on it, disable the original audio and language, and click on French to enable it. Then you can have a live translation of this webinar. There will be a poll later on during the webinar. You're encouraged to participate. The results will be shared in real time, so you have to make sure that you get yourself heard. If you have any questions, please post them in the Q&A section. I know there's a chat window, but the Q&A section is where it's at. It will be on your bottom left, and the speakers will take a look at these questions right at the end, towards the end of the webinar. And again, go to Twitter. We are live tweeting this as CIO East Africa and as GVG. And this webinar is under the hashtag of Cashless Africa webinar. Cashless Africa webinar, hashtag Cashless Africa webinar as one word. Now, in this day and age where every company is said to become or will be a tech company, organizations need to make sound decisions, and nothing informs decisions as much as data. Data is a solution you didn't know that you needed. And if you have heard of RegTech, then you must know of GVG. They work with governments, regulatory bodies, central bank governors, and key authorities to change the world with big data. Founded in 1998, Global Voice Group, or GVG, has worked with 11 countries to secure over $2.5 billion in revenue, and not just in telecom services, but also in the rising world of fintech. So today we are very happy to host James Claude, the CEO at GVG, Daryl Banner, VP of Commercial Sales and Strategy at GVG, Laurence Sarr, Technical Director, Andrew Mutua, Founder and CEO of Pesakit, Bernard Ewah, DDE Africa Government Development and Regulation at NITDA, Aristide Ouattara, Partner Business Leader Risk Advisory at Deloitte Afrique, and Sofien Sidhoum, the co-founder of Semoa. I'd like you to join me in welcoming GVG. And to tell you more about them is a man who will articulate their core mission, the CEO, James Claude. Welcome, James.
Thank you, Carol, for this introduction. I'd like to start by thanking all the participants who are joining us from all around the world. I'd like to thank CIO Magazine East Africa to that accepted to co-organize this event with us. And of course, I'd like to thank all the panelists who are joining us from different places, especially from Africa. Cashless Africa, I think it's a very interesting topic because Africa is already going cashless. When we look at the mobile penetration, when we look at how mobile money is being used, when you look at all the initiatives that are taking place from different central banks discussing about CBDC, when we look at the development of blockchain, when we see all the different payment systems that are being rolled out in Africa, I mean, we all can agree that Africa is already on its way to being a cashless society. Now, we shouldn't look at being cashless as an end. I believe it's just a mean toward financial inclusion, toward improving the life of all rural citizens and many people who live in many different areas in our societies. So all the stakeholders, of course, have a role to play. The big companies, the startups, the entrepreneurs. I'm very glad to have young entrepreneurs here in this panel to discuss what they are thinking, what they are doing in terms of improving and rolling out solutions that can facilitate this cashless society in Africa. From a GBD standpoint, we firmly believe that regulatory bodies have an essential role to play because they are the one who can set the regulatory framework that can kill or foster the development of payment system that can enable a cashless society. So we've been working with a lot of regulatory bodies, especially in Africa, and we believe they have an essential role, as I said. And today, we look forward for an interesting discussion. So we all can debate from different standpoints to understand the different perspective and how a cashless society, this is something that is already happening, can be really a safe environment for all the participants. This way, it can contribute toward financial inclusion and the financial development of all institutions and people around Africa. Thank you very much. I'll hand over to Daryl Banner, Vice President of Sales and Commercial, who will start with a very quick presentation. Thank you.
James, thank you very much. And again, a warm welcome to all the participants in this webinar. This is our second webinar, by far our highest attendance yet. And we're very excited to have everybody on board. As James said, my name is Daryl Barn. I'm the Global Sales and Strategy VP for GVG. I've been with the company for 11 years. And in my time, I've seen a lot in Africa, and the shift towards a cashless Africa is probably one of the most dynamic and one of the most important changes that I think we are all witnessing during our time. Technology is absolutely changing the landscape. But just as an introduction, I'd like to tell you a story. I'm hoping that the story will give you a real life understanding of the risks of cash and that it will reverberate with all of you on the webinar today. In October last year, sort of towards the end of the COVID crisis, but where everybody's feeling the impacts of COVID, a friend of mine, 73-year-old grandmother, he calls her Gogo Irene. She waited patiently in the line in a small town just outside of Johannesburg to collect her social payment grant. COVID had taken its toll, and the income that she and her family relied upon from the various odd jobs that her kids did was all but gone. Her social grant payment was the sole source of income supporting her 5 dependents. After 2 hours in line, and stories doing the rounds in the line of whether the cash van would show up, whether it wouldn't show up, finally she received a parcel of cash. As desperate as she was to get the cash, others were desperate too. And rather than work for their money, 2 guys threatened her with a knife, and they stole from her the $200 that she just collected. It was gone without a trace. The thief and the cash, all gone. leaving nothing but desperation, uncertainty, and emotional trauma at a time when everybody was doing everything they could for just a little bit of hope, a little bit of stability at a time when COVID had ravaged lives around the world and certainly in Africa. Cash, therefore, for all its ease of use, for its immediacy of transfer, its lack of direct cost, whether through taxes or other costs, provided it isn't stolen, of course, is still seen as king in many parts of the world. Today, the question we're asking, is it really king? With the risks of theft, perpetuation of gender inequality in Africa in particular, the lack of traceability, excluding cash users from credit extension. James mentioned that in his introduction, especially in the rural areas. The lack of traceability, excluding cash users from credit extension, and the growing economy to a large extent. The usefulness of cash is being reconsidered. Today, more than ever, the conversation around cash has shifted towards financial inclusion, eco-friendly, paperless money, digital currencies, a single African currency, electronic wallets. You know, central banks are talking about the possibility of issuing their own versions of Bitcoin. Whereas before central banks were seen as old school traditional bankers, today they are issuing a regulation for the digital future. Regulation is now, in many countries, separately governing the financial services conducted by the mobile network operators from their core businesses of communications infrastructure. Investors around the world are also driving the shift towards a cashless Africa. Just one statistic or bit of information to share with you. African homegrown fintech companies, those companies offering solutions to digitize cash and digitize banking, have since 2015 raised more than $500 million US. And keeping in mind, these are not large companies, these are startups, these are new ventures. $500 million flowing in the direction of entrepreneurs, of which we have Andrew Mutua from Pesakit here. $500 million flowing just into fintech companies. In 2020 alone, of the total money flowing towards ventures in Africa, 50% went towards fintech companies. So that gives you a very good idea of how Africa is moving away from cash and how the landscape is changing, how investors are driving this. It really is all about cash going cashless and banking going digital. Why is the attraction to move away from cash so strong today? Apart from the fact that for the first time today, there are indeed viable alternatives to cash that are accessible to citizens. It's also that the risks of cash today are that much more significant than before. On a continent where the poor continue to rely on social grants and the aged rely on pension payouts, the lack of integrated payment infrastructures means that cash is still often the only mechanism of payment. But that means theft, gender inequality, and lack of traceability of the funds means cash doesn't always go to its intended purpose. Leakage through corruption in the cash disbursement chain also remains a real threat. A cashless Africa is indeed upon us. And Lauren Saar, GVG's Global Director of Technology, will now take you through a short presentation on how we prepare for and manage the shift in this new direction. Lauren, if I can hand over to you.
Thank you, Daryl. And I would like to thank all participants attending this webinar. I'm going to share my screen. So before going deeper over the subject and the discussion, Daryl and I would like to take you over the race towards a cashless Africa. The current situation of African economy, which is a cash-based economy, the challenges and risk associated to a cash-based economy, the alternatives and solutions to overcome the challenges faced with a cash society, with a cash economy. And at the end, we're going to discuss also the future of African economy and where we are heading. But before going over that, I would like to share a few heads up with you just to show you the actual game changing and when where we are going when it comes to cash Cashless Africa, 70% of central banks in Africa, in the world, are actually running research on cashless society, just to digitize the economy, improve the payment systems, and boost the financial inclusion. And the second fact is that the African Tech Startup Report of 2020 from Disrupt Africa have shown 1.5 million USD worth of investment secured for fintech startup. And all these indicators are just showing us that Africa is on its way, on the way of a cashless society. But what is actually the current situation? The situation is that cash transactions are still prevailing in Africa due to the informal sector. 2 billion workers in Africa are in the informal employment, and over 80% of workers in sub-Saharan Africa find their livelihoods in informal sector. Who are those workers in the informal sector? We have the street vendors, we have the market workers, we have the domestic workers, we have home-based workers, just to name those. And why are they still using cash? Why cash is still prevailing? Why cash is their first choice? Because first of all, cash is easy to understand, and cash is trusted because people, they want to hold the cash. They want to touch it just to trust and have more confidence on it. And cash is so culturally entrenched that it doesn't require learning new behaviors. And that can explain, among others, why 95% of transactions in Nigeria are currently cash-based, and 60% of adults are without bank account in Nigeria. And that cash society comes with challenges, of course. The first one is safety. Safety is one of the challenges, and it's the case of money laundering in the absence of digital paper trail. Daryl mentioned it in his story. Cash have other safety challenges because cash can be seen as dangerous because it can just attract robbers. So there is that safety aspect of cash. There is another aspect for the states here is the fact that cash can be costly for the state, costly to monitor and also expensive to produce. Cash constraints also socioeconomic innovation and development. And all these implications and all these challenges associated to the need and the vision of the states to increase the efficiency of payment systems for their society, to enable real-time gross settlement in opposition to the net settlement at the end of the day with the current international payment systems, and also to boost the need of the government, of the states, to boost the financial inclusion, to bring more people, to include more people into the financial system, and to serve a huge wave of population, lead to the need of a cashless society. So all of these are indicators that are showing that Africa is actually moving cashless. We are on the way of cashless. And the widespread use of digital finance has the potential to boost the actual GDP of emerging economies by 3.7 trillion USD by 2025. And this is key and really important because actually most of the countries are not taking into account the informal sector into the GDP calculation. And having all these people, all these workers into the financial system of Africa will, of course, boost the GDP of the countries. And to do that, there are some drivers. The first one, Daryl mentioned it, James has well mentioned it. The first one is regulation. Regulation is key. Technology as well is key. And the infrastructure that will be used to achieve it is also something key. And what are the values of cashless society? Of course, for government, we mentioned it. The first one is the financial inclusion. The second one is the improvement of financial systems of the states. The third one is the money laundering, the financing of terrorism, the illicit activities, improve the market oversight efficiency as well, and less cost related to the production of cash. And for the citizen, of course, the most important is the safety, safer financial transaction ecosystem, and also to increase the financial accessibility, bring into the system more people that are actually in the informal sector. And for the whole society, it contributes toward sustainable economy development. And to reach that cashless Africa, there is a key driver, is trust. Actually, if we take the case of the fintech startups, fintech companies actually driving Africa towards the cashless society, KYC, know your customer, identify the customers are something really important. And we believe that that trust should come with the identity, digital identity. So the World Bank estimates that 1.1 billion people in the world are not able to prove who they are. So no one can identify them. Digital identities are means for individuals to prove who they are online with certain level of trust, and that will bring the trust into the ecosystem. That's key for the trust. And for a trust economy, it's important. I mean, without a secure economic system, financial exchanges become impossible. And one thing, we mentioned it, one thing is really important is the regulation. Regulation is something key, and regulation is driving will be driving Africa over the cashless society. Actually, states are running research on that, on cashless society, but there are also big actors, actually, the fintech startups, the fintech companies, the mobile money operators. Here we have in the panel, we have some fintech companies. They will go over the activities later on, but they are key actors over toward the cashless society for Africa. And one of the indicators is that even with the current situation of COVID-19, we have seen the growth of the digital transaction. And that's because states are actually promoting digital transactions just to mitigate the spread of the coronavirus. And also the startup companies, the fintech companies are on their side promoting as well the digital transaction just by waiving some of the fees just to encourage people to use the financial platforms. So mobile money is key. Mobile money is one of them, and mobile money started in Kenya in 2007. By early 2015, I mean, the world has noted around 270 live mobile money platforms, and over 80%, half of them are in Africa, and acting as catalyst to reduce the financial gap between unbanked people and bringing also more people into the financial system. So maybe Daryl can share his takes on the growth of mobile money, but something that we notice in Africa is that there are more mobile money accounts than bank account. And that's almost in all countries in Africa. And that's a fact. That's something showing that Africa is on its way and Africa is actually moving cashless. So Dario, I don't know if you share your takes.
You're absolutely right. I'd just like to share some data that reinforces how pervasive mobile money has become, and how when it was first founded in, not founded is the wrong word, but when it was born in 2007 in Kenya, how effectively that was the beginning of the end of cash. We all know that bricks and mortar banks, those traditional office buildings with tellers and bank managers, have always been geographically hard to reach, and then even more difficult to get any transaction approved. The following statistic will show you just how much these traditional banks have been replaced by mobile money. In Kenya today, there are 300,000 mobile money agents serving customers on every street corner, and that represents 535 digital bank branches for every 100,000 people, 535 per 100,000 people. By comparison, there are only 9 ATMs and 5 physical bank branches for every 100,000 people. And that makes it absolutely clear why Momo has completely taken over and has become the pervasive financial service platform as it is today. And why would anybody seek out that very difficult to reach, expensive to transact bank branch or ATM when a mobile money agent really is absolutely everywhere? And it's not limited to Africa. Around the world, mobile money has become, certainly in emerging markets, an alternative banking method of choice. And it is rapidly evolving to become the new version of digital banking as we know it today. Lauren, I'll let you continue. I just wanted to add that small aside. Mobile money.
Thank you. And what is behind that unparalleled growth of mobile money? First of all, is trust, because the fintech companies are maintaining strong KYC, know your customer platforms, and that is just boosting the mobile money. Other aspect are the fact that mobile money is something really convenient. You can make your payment, and all payments are instant, real time. You make the transfer, it's something real time. So all those aspects are just boosting the cashless of Africa. And we should take into account that with this platform, from the fintech companies, from the mobile money operators, are just bringing more people into the financial system of Africa. Now, where are we heading? It's something important, because I mentioned it at the beginning. 70% of government in the world, central banks in the world, are running research on cashless society to improve just the financial systems. And also, we notice that fintech companies are growing in Africa. So that just shows something. We are assisting to the migration toward a cashless society. That doesn't mean that cash is going to disappear. Cash will still prevail, but to boost the economy and bring more people into the financial system, to boost the annual GDP of the countries, of African countries, the migration is something inevitable, is something key. And toward that migration, one thing is important, is the compliance monitoring. that can safeguard the whole ecosystem and protect all stakeholders through regulation and strong regulation, and we mention it through digital identities. Another point very important for the migration toward cashless society is the interoperability between the different financial platforms. That's something really important, and actually some institutions in Africa are already working on it. And that's the case in Central Africa, where we have GMAC Pay actually supporting the Central Bank of African states just to put in place the right framework for the interoperability between the different financial platforms. And that's something we believe is key towards the race to a cashless society in Africa. That's what I wanted to share with you. I will let the floor to the panelists and to Carol just to share their experience on cashless Africa. Thank you so much.
Thank you so much, Laurent and Daryl. That was quite eye-opening. You know, there was a time when people used to get mugged just outside ATMs, and it became a thing because everybody knows when you go to an ATM, you're coming out with cash. So you're basically shopping for them, you know. And I also had no idea that wash, that's what we call money laundering here, that it could actually be prevented by paying attention to a cashless society, that we can, if you eliminated cash, you could eliminate so many problems. That I had no clue. So it's been great hearing from you guys. And now I think I have to launch a poll. And if you have been paying attention, then you know that you have the right answer to this question. So take a look at your screen now and answer this question. According to GSMA, State of the Industry Report in Mobile Money 2021, Africa's mobile money transactions value stood at $490 billion. What percentage of the global total does that constitute? Let's see how good you are at math and in school. Show us your best. And meanwhile, if you have just joined us, welcome. I'd like to invite you to take a look at the interpretation thingamajiggy at the bottom of your screen on the right. You can click on it and then pick French as your language, so you don't have to struggle if you're already here. At the same time, please make sure that you go on Twitter and check hashtag Cashless Africa webinar. Follow the conversation on that hashtag and throw in your tweets. We would love to hear from you. And finally, if you have any questions, post them in the Q&A section. I can see there's some questions here. Keep adding to them. We want to know what it is that you think. Please keep voting. Yeah, keep voting. But we want to know what you think about what Daryl and Laurent have said and what the other panelists are going to say. I think if you're looking at your screen, you can tell where most people are voting at. Okay, I think that's enough time so I can share the results. And I have to tell you, nobody got it right. That's very tragic. So here we go. According to the GSMA State of the Industry Report on Mobile Money in 2021, Africa's mobile money transactions value stood at 490 billion. What percentage of the global total does that constitute? Most of you said 81%. That was very generous. And the rest of you said 45%, and that was too little. The right answer was actually 64%. Yeah, clap for yourselves, you got it all wrong. Thank you so much for the poll. Now, I'd like to share with you something that will tell you exactly what it is that GVG do. And as you're waiting to watch it, I would also like to assure you that the panelists are going to come soon after this. And they're going to be here very shortly. Let me just stop sharing my results now that the poll is done. There you go. Share screen. Sorry, just a minute. Yeah, I found it. Technology is not my strongest point, but you are about to experience legendary awesomeness as soon as I launch this video. Here we go.
By the time this short video ends, about 1 million digital transactions will have been made worldwide, using mobile money, digital wallets, and a wide range of digital services. All these digital money flows can be traced, measured, analyzed, and regulated by the governments and banking authorities of each country. But do governments have the technologies to do so? GVG's solutions unlock this critical capability.
Now you have some insight into what it is that GVG does. So what you're going to do is we're going to invite the panelists to come up next. And we are going to invite, let me just exit. We're going to invite Andrew Mutua, the founder and CEO of Pesakit, Bernard Ewah, DDE Government Development, Aristide Ouattara, Partner, Business Leader, Risk Advisory at Deloitte Africa, and Sofien once again, Sofien Sidhoum, Laurence, and Daryl Bana. And we also would like to welcome James Claude. So here we have our lovely panel. Guys, you can introduce yourselves again and tell us what you do and how that brings anything to the table of a cashless society. I'm very curious to hear. Go right ahead, gentlemen. Who would like to go first? Perhaps someone you haven't heard from. Sofien, can you tell us what it is that Semoa is bringing? Yes.
Hello, everybody.
Hello.
Lovely to be here. So I'm the co-founder of Semoa, and Semoa is fintech. Present in West Africa mostly, originated from France and Togo. What we do is that we make the cashless Africa possible at heart. That's what we do. All the frictions that have been identified, we smooth them with our technological development. We have created a cloud-based platform for data analytics and monitoring, communications, and transaction. A unified platform that allows banks, financial institutions, telcos to interact with their customers and offer them value-added mobile services. It may sound a bit abstract, but let me tell you that with our solution, what you can do is complete your KYC for banks, for financial institutions. You can transfer money, you can pay bills, anything that you do now with a scattered products, we do in just one. That's what we do.
We're going to come back to you and find out how safe this money really is when it is cashless, and get more insight into how you actually do it. James Claude, do you have something to add to this? It's very interesting what you said, but what do you think about cashless societies? Is that really possible?
Yeah, I think it is. Sorry, the question is to me, right?
Yes.
Okay, yes, I think it's possible and it's already happening. And I'd like to add on top of what Sofien mentioned, the importance of KYC, because when you are interacting in a cash-based society, so your identity is you. So you are in front of me, I give you the cash. Now, when you are making online transactions, not only financial transactions, but any kind of transaction. So KYC is fundamental to properly identify the people interacting online. So I believe it's something, it's a great solution. And if you couple that with other kind of technology, such as public key infrastructure and other aspects such as mobile ID, so people can start using those. So KYC is the first layer when it comes to identify the people and start linking those physical identity, those people, with their online identity, what we usually call digital identity.
Well, now that you mentioned digital identity, I'm very curious to hear what Laurent has to say, because you talked about digital identity. Are you personally as Laurent, are you identifiable on the internet? Can we find you if we wanted to look for you? And can we trust the source of the information?
Of course, yes, you can go online and try to research. You're gonna see something, but here, what we are talking about is digital identity. The same way the nation are actually doing it using ID card. So it's important at the national level to be able to identify all citizens. And African countries are actually running research on digital identity, how to implement it. And there are some countries in Europe, like Eastern Europe, like Estonia, that already implemented that technology and that are able to identify all citizens digitally. So it's something key, something important toward the race for a cashless society. So here we are mainly talking about digital identity, the same way states are identifying citizens using ID cards or passports. Thank you.
Daryl, and so it's Daryl from Global Voice Group, just to add. So as GVG, we're constantly looking for new partners, new technologies. And during 2020, while confined to our desks, unable to travel, we took the opportunity to really understand the fintech market, especially the issue of digital ID. And I can tell you that in every single one of sort of Africa's key technology markets, be it Nigeria, be it Kenya, Egypt, South Africa, we have seen at least one company with a credible digital ID verification solution. So, what James said is right. KYC and trust, trusting that digital ID is at, the absolute foundation. It's the cornerstone of any financial transaction, and especially, online. So to the extent to which we can move away from a physical ID card, or at the very beginning, digitally verify that so that you don't have to go into a physical bank branch. You can validate that digitally remotely. That's a good start. But then moving that to some sort of public key infrastructure issued public-private key system that creates that trust, that true digital ID is absolutely where the market's going. Someone like Andrew Mutua from Pesakit, I know that he has this built into his business model as well. So, as an entrepreneur himself, a fintech himself, he could probably tell us a bit more about that. But certainly we're seeing it across the continent in the fintech space. And that is essential to moving towards a cashless Africa. Andrew, do you want to comment on that?
Yes, sure. First, by introduction, my name is Andrew Mutua. I'm the founder and CEO of Pesakit. Thank you, CIO and GVG, for organizing and inviting us. Thank you to the participants and all the panelists. I think digital ID is the cornerstone of every transaction that can happen online. As Laurent was saying, if we don't have trust in the systems we are using, or we don't have trust in the currency or in the cash or in the technology, then nothing can really happen. We cannot go cashless. So if digital ID is the first element, then trust is the second, and both go in hand. So if I am a service provider as Pesakit, can I trust the customers who are downloading Pesakit and using it? If I'm a service provider who is offering credit, can I trust the guys who have registered? Do I have a financial data on them or personal data on them? If I'm offering insurance, likewise, if I want to offer remittance, I need to know the person sending the money and the person who will receive the money. So that's the first and the most important component of us going cashless, digital ID, because that's what builds up trust. Then the rest of our technologies can come in once we have proper KYC and ID. And then for governments, I think in all countries in Africa, when you look at regulation, the most important regulation that they try to emphasize is KYC and AML compliance. So I agree with all your sentiments. Thank you.
Aristide, I believe that you have a presentation. Can I just activate it for you so that you can go ahead after Andrew has spoken?
Yes. Thank you all. Before going to the presentation, just present very quickly myself. I'm Aristide Ouattara. I'm the managing partner of Deloitte Risk Advisory for Francophone Africa. And with our colleague from Anglophone Africa, we have a team of more than 500 risk managers helping the client on different topics, especially cyber risk, regulatory risk, financial risk, and so on. And on this topic, as you see, I'm very happy that everybody is talking about the regulatory challenges, the compliance, KYC, and so on. And this is exactly what we do on this matter, helping the African firm and African regulators to manage the risk and the challenges around the cashless society. And for me, one of the key elements here is to know whether all of the members of the ecosystem will contribute to this cashless society. We used to talk about the fintech or the digital service provider, but we don't have to forget about the traditional traditional financial services. And here we see that we have released 2 days ago a barometer on the African financial industry. It's a very large barometer, but we have, since this is a very important topic, cover a specific part regarding financial inclusion and also the ways of new financial services, including the cashless, the digital payment. Okay, and if you move on the next slide, you can see that the key element that we wanted to address was sorry, but the resolution is very bad, but here what we have presented is how the traditional financial institutions are willing to work with fintechs and other digital service payments in order to move to this cashless society. And the good news is that those traditional financial institutions are really, and if you see on the first line, they are saying that they have already started some partnership with fintechs and other startups in order to help these ways toward cashless payment. So this is a very interesting information, and I think that will contribute to the acceleration of this this phenomenon. Okay, so somebody is saying that the PPT is not clear. If you want, I can share my screen. If you want, is it possible? I will share my screen. Okay.
All right, you can go ahead.
Okay. Just tell me if you are seeing the screen. I think it's better, no?
Yes, it is.
Okay, so what I was saying, so we, in this survey, and the survey is now available on Deloitte platform and also on Jeune Afrique platform. We wanted to address how the traditional financial institutions are helping and contributing to this cashless society. And one of the dimension that we have assessed is the way or to what extent they are having some partnership with those pure players. And what you can see here is that they have explained or expressed that they have already initiated this kind of partnership for 42%, and in a very short term, that will be 42% additional traditional financial institution that will move toward this cashless society. So my point here was just to see that all the financial industry is moving toward this cashless society.
Aristide, I mean, you make a good point there, and I'd just like to bring it back to one of our key markets, being Uganda, which is at the forefront of I guess digitizing its banking system. It's one of the first countries where separate regulation was issued, forcing the telcos to separately subject their mobile money businesses to regulation by the central bank versus their communication infrastructures. And then also, to your point, that says the traditional financial institutions, 42% of whom have already initiated one or two more partnerships. So at the end of 2019, a local Ugandan fintech signed a contract with the central bank, with the Bankers Association, and I think it was Financial Sector Deepening Uganda, to provide digital ID verification to all of the supervised financial institutions. I think they're 35 in Uganda. So traditional banks are critical to this movement. Without them, we do not get to a cashless society. But your poll is enlightening, and it gives us hope that because the big players are getting on board, the rest of the market will follow. Something interesting to note as well in this fintech space is these are homegrown African entrepreneurs, which is almost a first. Historically, we've imported technology and expertise from off the continent. For the first time, it's Africans solving African challenges and attracting good investment. So Cashless Africa, it's a great dynamic for our continent.
Yes, definitely. Thank you, Darren.
You're done with the presentation?
Sorry?
That's it for your presentation?
Yes, that was one part of my presentation, yes.
Okay, then I think that we can go to the Q&A section. It would be good to know what people are thinking and what it is that they want to ask you. Now, I would like to find out from Andrew what it is that, remember how when COVID started, the government said that they were encouraging us to not use cash, and the World Health Organization also did the same thing. So do you really think that governments and regulatory bodies can include financial inclusion through the adoption of cashless economies? Because the only people who are complying were the middle class. Everybody else was still using cash. So is this really a possibility?
Yes, I think regulatory bodies have an important role to play in driving a cashless economy. One of the things we saw here in Kenya during that time when government was giving directive on people to stop using cash, they also removed transaction costs on transactions that were lower than an equivalent of 10 USD. And that also happened in Tanzania and some other markets across Africa. So regulators are starting to encourage people to use more of the digital cash, because it meant that you sending money to your relative was no longer charged. You withdrawing that money was no longer charged. And also if you are going to pay a bill, so if I, as an individual, I'm paying to a merchant, then it wasn't charged. I also think other areas, apart from just removing or trying to regulate the pricing of transaction, another area where regulators can really help is working hand in hand with the innovators. So as Daryl was saying, most of the innovation that will drive the cashless society of the future is homegrown. So they need to start to bring in innovators, maybe into sandboxes. So develop regulation that allows startups to innovate. And once they've been able, and just a safe environment where they can innovate, test their ideas, maybe do small pilots within the country. Then once they're able to showcase that there's value and they're solving a problem, then also allow them to partner with already existing regulated companies. So allowing, let's say, startups like us, Pesakit, to partner with existing banks who are also regulated. So I think there's a lot regulators can do. So just guiding on pricing, sandboxes, and creating an environment where partnerships can be easy between incumbents and fintech companies.
Okay. Now that we've talked about cash being king and transactions in Nigeria are 25% cash-based, how do you convince someone who wants to touch and feel money, who thinks that when they handle money, that's when it has real value? You know, how do you convert this consumer to adopt a cashless payment system? Is it even possible to do that?
Hello?
Yes, can any of you take it? Yeah.
Yeah.
I can take it first. No, I think it's possible. You know, it's just showing that consumer value of why they need to have money online. If we have a big ecosystem where, you know, at the moment, most of the money being held online is either in a bank account, then you have a digital card for transacting, which is not really, there's not really a lot of variety, or mobile money where I just deposit money to my account so that I can send to a relative or a friend. But if there's more services online, so if I have money online, I can pay for I can pay merchants, shops, kiosks, I can buy shop online, I can do other e-commerce transactions online, maybe I can do better remittances, buy insurance. So if there's a variety of services, I think there's more value in me having my cash online. So it will be more of the ecosystem coming into play where there are more merchants to pay. Then I think you'll see more value in having cash online. But at the moment, I think the most important thing is giving people variety and more convenience. So it's like beating the convenience that cash has on customers. Yeah, that's it from me.
I absolutely agree.
Let me jump in here.
Yeah, go ahead, Bernard. Go ahead.
Yeah, I think I was almost forgotten. So by way of short introduction, I work for the National Information Technology Development Agency, NITDA in Nigeria. And so function basically around developmental regulation, which is a subject that has been mentioned here repeatedly. And it is in this framework that governments, not just in Nigeria or the institution where I work for, you know, can actually instigate new behaviors, you know, among citizens, and in this case, consumers of financial services. So the key thing is about innovating around, you know, digital services, particularly those that are offered by government. And I say this because in Africa, of course, the government is still a very, you know, a big player when it comes to provision of services. Right. I remember 15 or so years ago, you know, when we consulted for organizations, including the private, public sector, you know, we would always talk about advise organizations to develop digital strategies for their business. But, you know, in the last decade, there has been a jump. You know, digital services have moved from being the tail of the dog to the head, right? So it's it's no surprising that financial services, financial cashless payments have become so prominent in Africa. So for governments to discourage reliance on cash, there's a combination of factors here that must come into play. One which I've already mentioned, that we need to see more innovation, particularly in government services. Two, citizens are not just drawn to cash because of because they want to have cash. Of course, we've also talked about the risk in carrying cash, but citizens are driven by incentives. So part of this innovation that we should see in Africa should be around social services, insurance. I mean, some of these areas that are underserved, right? For instance, personal and insurance and other forms of insurance, healthcare, education, and so on. It is very easy to identify, communities of people or blocks of, with shared interests around those key social indicators, and that is one way that governments can discourage use of cash and promote more, the adoption of electronic payments.
Great. I'd actually like to hear from you, Bernard. What do you think? Do you also think cash is king?
Cash is still king, right? But the point I made earlier is that, human behaviors are always based on incentives. And once, as regulators, we're able to identify those incentives, that are prevalent in our societies. For instance, people want to have access to better quality of life. People want to have access to, they want to secure their transactions, whether through insurance, and so on. Then it will be easy for us to tie these innovations in payment systems to those imperatives that are attractive to every citizen.
All right.
Carol, I'd like to add on top of Bernard and what Andrew mentioned earlier about the specific case of Nigeria. I believe this is a perfect example where regulatory framework can play a significant role in allowing certain kind of innovation to happen. Because if you compare Nigeria, by far one of the biggest economy in Africa, and you compare the development of penetration of mobile money in Nigeria versus Kenya or Uganda, there's a huge difference. Why? Because in East Africa, the regulation was at the beginning, since M-Pesa came as an innovation, the central banks didn't want to go with strong regulation. They allowed it to develop before getting into regulation was following, and then adapting to these new kind of services. While in Nigeria, the idea was to regulate mobile money as if they were banked. So that completely stopped the development of mobile money in Nigeria. It's only last year where the government decides now to develop or to adapt the regulatory framework to allow really mobile money to pick up in Nigeria. So I just wanted to highlight that point.
Okay.
That's correct.
Thank you for that. Actually, I didn't know that you could be innovative with regulatory policies until M-Pesa came around, and that's when I realized this is the case.
Exactly.
So now we talked about trusted digital identities. Are there any countries that have adopted this in Africa? Any countries that we know of? And if they have, what has it been like for them? Because this makes me very curious. Are we that far advanced when it comes to creating digital identities?
So in Nigeria, the process has been going on for several years now. We started by developing a framework for public key infrastructure. The idea was is to institutionalize, a national trust system, allowing for diversified, a range of players, to come in, and provide secured or electronic authentication for transactions. This is important, just as has been mentioned previously, because apart from identifying individuals, right, you also, digital identification systems also ensure that, the transactions that are carried out through channels are trusted by recipients, to forestall other, unforeseen circumstances. Nigeria too, started the process of harmonizing, existing identity systems and so you must have heard in the news where we now have a national ID number, which is been integrated into other platforms, including banking, and so this is a process that Nigeria is adopting. But we want to see ultimately a situation where key players like the road authorities and so on are domesticated, to reduce capital flight from reliance on foreign CAs for authentication of electronic transactions. Yeah.
Carol, in addition to Bernard's case study or reference on Nigeria, one of the other countries that we can speak for in terms of public key infrastructure where it's well established and operating is in Rwanda. Rwanda is another one of GVG's clients. In 2013, their telco regulator or utilities regulator, they developed PKI regulations. And then in 2015, they established a public key infrastructure center. So since then, they've been issuing public and private keys, digitally authenticating people online, especially allowing them to interact with government across the Rwanda online portal, which allows them to apply for national IDs, national passports, driver's licenses online, with the public key infrastructure establishing that level of trust between the applicant and then the government authority. So Rwanda is another country that we can add to the list of case studies alongside Nigeria.
So Daryl, if you allow me, I would like to just add to what you said and what Bernard said. There are some prerequisites for digital identity, the implementation of digital identity. One of them is public key infrastructure. And most of the countries in Africa are actually building their national public key infrastructure. So that's key for digital identity. Nigeria is doing it. Rwanda is doing it. Congo Brazzaville is actually doing it. Ivory Coast is on its way as well doing it. So most of the African countries are putting in place the base for national identity. The second factor really important for national identity is the penetration of mobile devices in Africa. And the penetration of mobile in Africa is over 44%. So that's something key for mobile identity. So using those parameters, there are some technologies that can enable the states to put in place the digital identity. One of them is the mobile ID. Another one is smart ID. So all those factors are just enabling the possibility of going over a digital identity in Africa. But those are the prerequisites: public key infrastructure and the huge penetration of mobile in Africa. Thank you.
All right.
Of course, tying everything together with robust regulation.
Okay, great. So I have a couple more questions to go. So when it comes to cybersecurity, I mean, there is the Data Protection Act 2019, there is the Nigerian NDPR, then there is POPIA from South Africa. So is it even possible for a service provider to guarantee data privacy and confidentiality and for cybersecurity to actually be enforced? This one goes to all of you.
Thank you. I think this is a key question. When we start on cybersecurity, cybersecurity is a key issue when you deal with cashless payment. When you digitalize payment, you are opening to the services to internet, and the provider are exposed to cyber risk. And I think the challenge there is the number of users. Okay, actually, if you take the financial industry, you have few number of customers since the level of banking inclusion is low, and you have already some issue on cybersecurity. So if you now think about having a more important number of customer using those digital services, you can anticipate that we have a lot of challenges there. And from the financial institution standpoint, they are investing a lot in cybersecurity because of the volume of the transaction that they are dealing with, and also the increased complexity and of the threat that they are facing. So in this framework, our recommendation to the different provider is to have a cyber strategy. When you are developing a cashless solution, you need to think about what cyber strategy you have to implement in order to move to that. And then you have to select some cybersecurity provider. There are a lot of provider, but the key challenge here is to have this cyber strategy. And unfortunately, Africa is not moving at the good speed to enhance this cybersecurity capabilities. And the second topics on the data privacy and confidentiality, I think this is it's more wider than that, because we also need to have a regulatory landscape that help tackling topics like that. For example, in Europe, you have the GDPR, so the data privacy regulation, that provide very precise standards for helping the data privacy and confidentiality of customers. In Africa, unfortunately, we don't have this kind of framework. So it's very difficult to guarantee this privacy only on the will of the providers. So this is a very important room of improvement, and we encourage the regulator to also cover this part.
All right, that's brilliant. That's a brilliant answer. Thank you. Anybody else?
Yes.
Then you can try and keep it short.
Okay. So I'm glad you referenced the Nigeria's data protection regulation, which we have also gone ahead to provide a compliance framework that effectively monitors how data subjects and data organizations are interact to ensure compliance with this regulation. So compliance is key, and that's one of the points which I'd like to make here about regulation. I mean, regulation by itself, it's good. We've seen quite a lot of regulations from different governments across Africa. But one key thing that I would like to see more is submitting such regulations to vigorous tests to ensure that be able to measure the impact of the outcomes that are expected from such regulations. That is very key. The next thing I'd like to say about this question is that it is difficult to separate or not to talk about data when you're discussing cybersecurity, and it's another area of innovation and regulation which we need to see around data, recognizing the continued evolution of data itself, right? In Nigeria, one of the initiatives I just worked on was the mobile big data policy. I think we are about the first country in Africa that has worked on that. And that is basically a recognition of the growing evolution of data itself and its implication on cybersecurity, on privacy, confidentiality, because as the digital economy continues to expand, we are beginning to see not just new data sets, but new ways that these data sets are being employed. And that has various, provides unique challenges to regulators, as well as opportunities for the economy as a whole.
So Carol, if you allow me, I would like to add to that because Adama mentioned the cyber strategy, which is key. And when we talk about cyber security, there is something very important. It's the cyber resilience, because digital technology are usually attacked, but when they are attacked, do they have, the fintech companies behind the digital technologies, do they have the cyber strategy just to mitigate the risk and have their system running and avoid any impact from a cyber attack? So cyber strategy goes with cyber resilience, and that's key for digital platforms. Now, when it comes to data privacy, when it comes to confidentiality, regulation is key, but of course, the technology as well is key. Now we have the digital, the crypto assets using technologies like blockchain, and those technologies are guaranteeing the safety, guaranteeing privacy and confidentiality. So of course, regulation is key, but also technology is key for privacy. Thank you.
All right. I would like to ask, there was a time that there was a lot of conversation about USA, United States of Africa, and it was perceived that this was going to turn the whole of Africa into one strong economic bloc. So what makes you think that a cashless economy can do something that politics failed at doing? This one goes to all of you. I'm interested in hearing your answers. Please keep it as short as possible.
Well, I'll begin, if you don't mind.
Sure.
We know that the level of riches of a country is intrinsically dependent on the amount of transaction it can perform. The more you transact, the more you create value. So cashless economy allows for faster value creation. That's what it is. That's why that's another reason to get there. That's why we work on that at Semoa. That's why the tools we have developed allow for transaction outbound, inbound, in any way. Our platform works for a merchant that wants to cash in its product or service with mobile money, with credit card, with cash also, because you have to accept it, with bank account, with crypto, with everything. You can pay the same way. And this is not only within a country, but this is trans-border. When you do that, when you are able to reduce frictions while maintaining a stable and trusted regulatory framework, because you have to control the transactions, then you allow for economies all across Africa to create more value faster. We're just a piece of it that we want to contribute.
Okay. Fascinating. Yes, Bernard.
I agree with you. As I said earlier on, key for Africa to emerge as a strong economic bloc is to rigorously drive expansion in the digital markets. Enhancing the performance and capabilities of the innovation ecosystem is primary. If you take Nigeria, for instance, with a very high population of young people, that's a direct opportunity for their engagement in providing innovative services. So one of the areas which governments in Nigeria, as you may know, the entire industry. It's now being rebranded as a Ministry of Communications and Digital Economy. Is to foster the expansion in digital services by the innovation ecosystem. I think that is a way to bridge the gap in terms of the services that are available. And indeed, cashless payments in itself is a means. And the more digital services we have provided by indigenous players, whether from Nigeria or other parts of Africa, the more there would be increase in electronic payments.
Oh, great. Does anyone have one last thing to say about Africa as an economic bloc?
I think on my end, when I look at it from the consumer side and small businesses especially, I think the more cashless they go, the better their financial data profile. So if I'm an individual or a small business, it means I can access more credit, I can access more financial services, maybe I can get better pricing on financial services. And also it increases security of my resources, my revenue, or the cash I have. So I think the more we take cash online, the more we have better data profiles for consumers and businesses, and the more we can unlock resources for them to grow our economies, because the key drivers of our economies are these individuals and businesses in the informal sector, in agriculture, and all these other industries who are working hard every day. So the more we get better data profiles from them, the more we can unlock more financial services. So I think going cashless should be the way for Africa in all different verticals.
It's interesting that you should say that, because someone is asking, with the increasing penetration of mobile money in Africa and looking at the literacy rate in Africa and the target of including the informal sector, what that will drive Africa towards a cashless society. How can we effectively combat mobile money fraud, where the victims of this fraud are mostly in the informal sector? Does this mean you need to educate the informal sector, or what does it mean for them?
Yeah, I think also we need to create more robust systems as innovators, because one of the items that was mentioned by Aristide around cybersecurity strategy, I usually see it as a continuous job. You don't just have a strategy, then implement it day one and leave it at that. So you need to, like every other 2 weeks, you're looking at new threats, either by fraud or other types of attacks, and trying to solve them. So I think it's two ways for us to educate our customers, even for government actually to educate consumers and other lobbyists or different players to educate the consumers on the dangers of also being online. But also it's for us as innovators to make our systems more secure and also make them more personalized to the person we're serving. So if it's, let's say it's an informal sector trader, maybe a way for them to unlock their account, or for them to transact in the same way as how guys use card transactions, where they just use their CVC for approval of online transactions. So maybe make it a bit more robust, or add a few other layers of security to that. So it will be more personalized, and I agree, yes, we need more education for customers and businesses, especially in the informal sector.
I just have to comment on that.
Maybe to add,
sorry.
Yes.
No, I just have to comment on that, because this is exactly what we're developing. Like one of the ways, just Andrew, what you said, what we're doing is that we are working on voice recognition technology, so that people can interact with their mobile money provider by voice and secure it by voice. Because literacy is a problem. If you want financial inclusion, you want to reach people who are not comfortable with reading and writing. And so that's why we went through a direct communication channel like WhatsApp, Telegram, USSD to reach the bankless, but some of them can't read or are not familiar with it. So we're going voice. We send instruction by voice, and now we're working on identifying them by voice. And now we circle back to the TDIs, digital identification. Sorry, I had to say that.
Let me just add
and just to add a very quick thing on that, and I mentioned cyber strategy, and Laurent, you are right. You also need to deal with cyber resilience, and I will add another thing, that is cyber vigilance. Okay, and this vigilance is one of I think the most challenging things. How do you deal with cyber vigilance is to, for example, creating a connected database where you can identify all the cyber risk or the cyber threat or all the fraud that you have in the area. If you take a place like Western Africa on the YMU zone, the regulator is thinking about creating a kind of a cyber intelligence center in order to gather all the different fraud and other financial crime event in order to help customers. Because if you have a fraud in one country, the same fraud can occur in other places. So one of the key things here is also to have this kind of cyber and fraud intelligence center that can be shared between different jurisdictions or different firms in order to help also the customer to be protected on that.
Just to add on top of that, this is where I believe there is a clear opportunity for central banks or the regulatory bodies to work directly with the service providers to create this kind of safe environment for this ecosystem. For example, by using regulatory technologies, the central banks can get in near real time all the information from different mobile money providers, and using analytics and big data, even predictive analysis, so can prevent certain type of frauds, because from there you can have an holistic view of what is happening within a specific country. Just to add to the previous question about the bloc, African bloc, in the cashless can create some kind of one economic bloc. I believe this is important for where Pan-African organizations such as Smart Africa and African Union can play a role to harmonize the different policies between different countries. Because if Togo is moving in one direction, if the identity or digital identity law or policies in one day is different, and then Algeria decides to do something else, it can become even more siloed than what it is today. So I think it's important where regional organizations can start working together, because as a bloc, we are stronger. As a bloc, we can even define better policies that are followed all across the continent.
Can I just make one quick point, please? And I'm basically riding on what James has just said. And if you are a participant and you're wondering how you may, if you're interested in this discussion and you're wondering how you may, be relevant, my suggestion is that, think about, advocacy, civil society, just like any other markets are very important in this conversation, all right? Because whether we're talking about protection of consumers, or enhancing their literacy levels, there's always so much government and businesses can do, because we all have our interests, even though we often find a common point, right? So civil society organization is important here, oftentimes as a bridge builder, right? And so it's very important for us to, maybe that'll be a conversation for another webinar, but it's very important.
Okay, so what happens with identity theft? Because there is the whole cashless thing, but now you have your mobile phone, your money is there. When they catch you and they're robbers, they want your PIN number, they want you to transfer the money back to their phone. How do you prevent people from being fleeced of their money when they are, because having identity theft is a real thing. Yeah.
Yep. Education.
What do you tell them? What do you tell them to educate them?
First, you have to tell the public about the best way to ensure personal safety of their data and the transactions that they carry out. that's in electronic payment form, basically. All right. And another thing is ensuring that the infrastructures that are being provided by organizations, private businesses, are subject to, measurable controls or regulations. All right, not so much as to put a choke on their necks, but ensure that they are in compliance with safety protocols. That would not only ensure the safety of the organizations themselves, but their customers. So these are very, very important. Now, in this identity theft business, you have one guy who is trying to be ahead of the curve, the bad guy. It is very important that all players continue to improve, their capabilities in this space. But for the consumer, who often is the biggest victim, you couldn't, inform them enough. You just have to continue to, to do that and provide information about new strategies and challenges, that are emerging on a daily basis.
Okay, Zakaria from France is saying when his bank card is stolen fraudulently, then the bank refunds him. Do the banks refund people in Africa? Do we have this conversation with the banks? Do they give us back our money? Any of you can answer, if you know.
Yes.
They do.
But they do, but this is it might take a while. But yeah, this is a practice that is we are already seeing in Nigeria, all right? And that's because, like I said earlier on, the protection of the consumer has to be clearly spelled out, at all times, But and also the best way to reduce the incidence of theft or refunds, as the case may be, would be, we hinge highly on how well informed the consumers about their practices and their rights.
Okay, one last question. Oh, you have an answer, Andrew. Oh, go ahead.
Okay, let me add to what Bernard has said. One of the challenges with digital identity theft, and even theft of digital money, is sometimes the authorities who you will report to for investigation, the police, they're not well trained to handle cyber security issues. So they don't know where to start with the investigations, or they don't even have access to relevant data that can help with the investigation for you to get a refund or for the criminals to be caught. So as we are moving towards a cashless society, I think also other arms of governments who deal with these crimes need to be educated. They also need to be upskilled, given the right resources to actually perform their work. So if somebody has done, let's say, a SIM swap on you, who do you report to? If you report to the telco, they'll tell you, go and bring a police abstract. When you go to the police, they don't even know what a SIM swap is, or even how your money was lost. So many different government bodies need to be upskilled as well as we are going cashless.
Okay, now if you've sent us a question and you haven't gotten your answer, note this down. Go to CEO-office@globalvoicegroup.com. That is CEO-office, like OFFICE, @globalvoicegroup.com. And they will answer your questions personally. They are more than willing to. So, gentlemen, thank you, Andrew, Bernard, Sofien, Adama, James Claude. Thank you so much for a riveting conversation. That was absolutely explosive. I would like to say thank you to all the people who have attended this event. It's been great having you, and I'm glad that you're so many of you. That's awesome. And I would like to invite James Claude to wrap this up so that he can send us home.
Thank you, Carol, for this great job. Thank you to all the panelists. I think it was a very interesting conversation, very, very good debate where from different angles we were able to really shed light on how beneficial a cashless society can be for Africa. I'd like to thank also CIO Magazine East Africa to co-organize, to have accepted to co-organize this event with us. And I'd like to thank especially all the participants who have joined us from all around the world. And I think it was a very successful event based on the number of participants and the level of engagement. So as we have discussed, the cashless society is something that is already present in our life. And all the players, all the stakeholders really have to work together just to make sure that we have a safe environment and where all the participants in this whole ecosystem can really benefit from it. Thank you very much.
Thank you.
Thank you.
Thank you. Thank you.
Thank you.
Thank you, everyone.
Thank you.